Hi, this is Dylan. Welcome to Daily Trend Analysis video. Today is a Thursday, 18th of June. Alright, we're gonna start off with the euro against the US dollar. So this is the 4-day chart. As you can see, the price has appreciated, and then it got resisted again at the price of 1.1379 for the third time. But then right now we're seeing the price is already beginning to break above and about to reach the final adjustment level, Fibonacci expansion 161.8%, the price of 1.1427. But however, based on the structure itself, we're actually expecting price to appreciate a lot further. So with the Fibonacci expansion again, we have plotted a few new levels right here. With the very first level, the price of 1.1530, followed by 1.1609, and last but not least 1.1725. So zooming the smaller time frame in the 15-minute chart, what we want to do is that we want to wait for price to appreciate a little further and wait for it to retrace, and as it touches the 55 moving average, you might want to use that as the support level to go for the long opportunity. Alright, so that's pretty much for the euro against US dollar. Next we have the New Zealand dollar against the US dollar. So last night itself, during FOMC statement, price actually appreciated, and then it fell in the morning as the GDP data missed by 0.4% compared to the forecast, and therefore it increases the bets that the Reserve Bank of New Zealand may cut rate even further, and therefore the price actually fell all the way and back to the bottom of a falling trend channel, and right now we are seeing the price is rebounding off. Alright, probably making some correction right here. So since it has already reached the bottom of the falling trend channel, we can expect the price may begin to rebound off and appreciate a little bit further, or rather it may just move sideways till it touches the top of the channel again. So you may just want to wait for price to retrace all the way, maybe till it reaches some of the key resistance level here. Probably first level we might be looking at is at 0.7034. If not, I would actually like to advise that to put this currency pair aside for the time being. So that's for New Zealand dollar against US dollar. Next we have the pound against the US dollar. So price has appreciated and just appreciated a little bit further more as retail sales data has been better than the forecast. Right now it has reached a new high at the price of 1.5911, breaking above the Fibonacci expansion level 141.4%, resistance level 1.5885, expecting price to appreciate further as it forms a probable rising trend channel. Alright, what's more important is that in the day one chart itself, initially we are talking about this probable head and shoulder, but if you look at the bigger picture itself, there's actually a very huge inverse head and shoulder that's forming here, and therefore right now it is about to reach the neckline of the inverse head and shoulder. So as it touches, we are expecting a very quick retracement, and from there you may want to see if you can go for the long opportunity. And tonight itself we have the CPI for the US economy. If it is bad, we are definitely expecting that the pound against the US dollar will appreciate a lot, probably all the way to the final adjustment level, the price of 1.6072, and further above till it touches the top of the rising trend channel. Alright, and if this inverse head and shoulder were to successfully form, then we are expecting price to appreciate a lot further, probably about another 500 pips in this case. Alright, so zooming the smaller time frame, the 1-hourly chart, we are seeing the price has rebounded off from the 20 moving average. In a 15-minute chart, it is pretty much supported at close to the 55 moving average. So in the smaller time frame, in the 15-minute chart, you might want to wait for price to retrace till it touches the 55 moving average before you look for the long opportunity. Alright, if you look at the structure, it's kind of like as it appreciates, it starts to move sideways, dip down a little bit further, then it starts to move up. Same here, as it moves sideways, dip down a little bit, then it starts to appreciate again. So you might want to wait for the same kind of structure to form. As it dips down, then dips downwards, then you might want to go for the long. Right, so that's our pound against US dollar. Next we have the Aussie against the US dollar. Alright, what we are seeing here is the price has appreciated again aggressively as it finally break above the 200 moving average in the 4-hourly chart. So based on the structure, yes, we are expecting price to appreciate further. Right now it has also it is also breaking above the resistance level, the price of 0.7812. So expecting price to appreciate further from here. We may want to use a Fibonacci retracement to see when will the price begin to make a turn. Alright, so the 61.8% level is at the price of 0.7946, right above the next resistance level, 0.7929. So since we are expecting price to appreciate further from here, we might as well just zoom in a smaller time frame, the 50-minute charts. Wait for price to retrace. Alright, it should be reaching an exhaustion level very soon. So wait for it to reach that level and wait for it to retrace. Probably using the 55 moving average or the 20 moving average as a support level to go for a long. In this case, and key level to take note is at the price of between 0.7929 and 0.7948 as the key take profit levels. And that is for the Aussie against US dollar. Next, with the dollar against the Japanese yen, we are seeing the price has fallen as well. So basically during the FOMC statement and the conference itself, it is kind of slightly dovish, as the Federal Reserve has signals that they need to have, they want to see more data to have more specific idea, or rather results, whether the economy can withstand a interest rate hike at this point of time. There isn't a very specific month that the Federal Reserve has given, and therefore it creates a kind of dovish sentiment here, and therefore the US dollar has depreciated all the way, especially during the conference. It depreciated even further from there. Right now we are seeing the price is being supported at the key support level, the price of 122.61. At the same time, the 200 moving average might expect a little bit of retracement here, but my take is that price may just break below the 200 moving average and the support level, the current support level right now, all the way till it touches the retracement level of 61.8% at the price of 121.28. So in this case, zooming the smaller time frame in the 15-minute chart, very steep, so you might want to wait. You might want to use the 20 moving average as the key resistance level right here. But of course, if you feel that it is a little bit too steep and you want to wait, you may just want to wait for it to get supported at the 55 moving average. Though the past record wise has not shown that 55 moving average is a very strong resistance anyway. So, or rather, you can just wait for price to fall all the way till it reaches the retracement level of 61.8% to go for a long instead. Alright, so that's for dollar against Japanese yen. Last but not least, we have the dollar against the Swiss franc, which has also fallen. Alright, so right now we are seeing the price is being supported at the top of the previously broken falling trend channel. So we are seeing some pullbacks over here. So every time what we observe is that every time it touches the top of the previously broken falling trend channel, we do see some forms of rebound or consolidation. So right here in the smaller time frame, you might want to go for a long. Alright, so wait for price to retreat a little bit to a better price itself. You might go for an intraday long, and based on the current structure itself, in the smaller time frame, it might just form a inverse head and shoulder like formation here. You might be able to earn a little bit of a profits by doing a long at this level. But if not, we're actually waiting for price to fall all the way back to the key support level right here. Alright, at the price of 0.9084 to go for a long instead. Alright, so this is the next key level to look out for. Alright, and that's pretty much for the dollar against the Swiss franc. And with that, I just want to share the one last currency pair, which is dollar against the Canadian dollar. So right here, we are seeing the price has previously it has already broke below 200 moving average, came back a little bit. didn't manage to break above, didn't manage to stay above. It breaks, it broke below the 200 moving average again, and right now it is falling very steeply, and therefore we are expecting price to fall even further. Alright, so we are expecting price to fall all the way to somewhere the price of 1.2033. So in the smaller time frame itself, back to the 15-minute chart, we want to look for some kinds of retracement to go for the short. Alright, there's still quite a good number of profits to be earned from shorting this the trend right now. So that's for dollar. That's the dollar against the Canadian dollar. But however, if it got supported at the retracement level of 61.8% and it came up again, then that might form a potential inverse head and shoulder. Then you might want to change your sentiment to go and look for a long instead. Alright, so that's for dollar against the against the Canadian dollar. With that, I've come to the end of today's trading analysis video. So thank you for watching, and I'll see you